It's technical glitches here as per the usual. And yes, I am live. Okay, cool. So welcome everybody. It is coffee break time. So I decided to move these a little bit later in the day on Fridays just because, well, I'm not great in the mornings, to be honest. So yeah, I think I'm gonna keep it here at 3 o'clock Eastern each Friday. And right now, I don't know if you can hear it, if it's coming through the microphone or not, but I am boiling my water for my tea. And this time it's green tea, sencha, organic from, say where? Usually it says where. Oh, doesn't actually say on this one, but I call it a coffee break, but I've never been a coffee guy. So, tea for me. All right. There are two main things I wanted to talk about this week, and one of them builds on what we discussed last week with the Trump accounts. So I think it's Wednesday, the Treasury announced the winners. And by winners, I mean the custodians. So let's go over here. Let's share screen, share that one. Yeah, okay. So Treasury announces investment lineup for Trump accounts. This was July 1st. Oh, this was a little bit longer. All right. So the U.S. Department of Treasury today announced the investment lineup for Trump accounts, including the initial default investment that will be available at launch and 4 additional low-cost index fund options that responsible parties will be able to elect in the coming months. Through Trump accounts, American families will be able to choose among the lowest cost options available to invest in their children's future. And yeah, fair enough. Here's the problem I have with it is that so the way the legislation is written is that basically it has to be an S&P 500 index or similar that you know encourages investment in American companies. So maybe we'll get like a Russell 2000 or something someday, but right now it's S&P 500, and we got one total market and a S&P 1500 fund. Oh, I guess there's two total markets. Right. So, but the custodian is going to be State Street, and that's going to be the default choice. And if that's the default, you got to imagine most people are going to stick with the default. So the other ones that are winners though are Vanguard and iShares, and you know, so these are going to be low fee index funds. We're probably looking at a couple basis points, 1 to 3 basis points somewhere in there as far as the fee load, which is small, fair enough. The problem I have with it is just that individually the fees are small, but in aggregate we're talking 50, 60, $100 million a year of fee income as this program grows. So yeah, it just doesn't sit quite right with me in that these firms are picked as suppliers and others are not. I realize that might be a little bit of a purist view on my part, but it's how I feel. So but congrats to State Street. That's basically um free money for them, to the tune of 50 to $100 million a year, which is great. The Trump accounts did go live. So on our last show, they were about to go live, and now they are live. So you can download the app. And so I actually had not done my 1040 yet this year. So I realized that as this was going live, and I said, oh, I haven't enrolled my kids yet. So I went through the process on irs.gov where you could fill that out directly and submit it directly there instead of attaching it to your tax return. And then I went ahead and actually filed my 1040 because I had been waiting for a brokerage 1099 package, which I prepped everything prior, and then you know just kind of sat there for 4 months. But yeah, I got all my transcripts, and I made sure that there wasn't anything weird. There was one weird thing. One of the payment processors we use for Tax Sherpa, it keeps sending me 1099s instead of sending the company 1099s, even though it gave them the company information and I told them it was not a disregarded entity. But unfortunately, on Schedule 1, there's now a line to mark that I received this amount in error because it actually belongs to this other entity. So yeah, 1099s are always a problem because you're dealing with oftentimes incompetent people. But yeah, so I went to irs.gov, logged into my account, and was able to submit the 4547 that we went over last time directly to the IRS. And now I'm waiting on processing, right? And so, once that's done, I'll be able to log in and set up my kids on their $5,000 deposits, for the year. So all in all, things are progressing. This is now in play, and I'm relatively optimistic about it. Um, you know, Doing an S&P 500 or a total market fund, if we look at the last 50 years of investment performance, it's done well when reinvesting dividends and so forth, which I'm assuming that these mutual funds will do. And then it's tax sheltered, and then it basically converts into an IRA but with these carve outs for first business, first home, or college. So we went over the math last time. I don't think it makes sense to use these for college. I don't think it makes sense to even use them for a first home. I think the real killer use case is to let them grow to retirement age, and then use them as traditional IRAs in that regard. So that's my take on it. Anyways, I think that's the most effective use of the funds. So that is now working, and the I just hope that everything works out as promised. Now, the one thing about it is the name, the Trump accounts. You know, I when Obamacare was passed, the official name was the Affordable Care Act, and when Obama was in office, people referred to it as Obamacare, and then like if you called up the health insurance exchange customer service line, you say, "Hey, I need Obamacare." When Trump got into office in 2017, they 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 put the kibosh on calling it Obamacare. So like if you called up and you said, I need to renew my Obamacare, they would say, we don't know what that is. We have Affordable Care Act policies. So they were trying to do a sleight of hand on the name change. But this one is actually called in the law. It's called Trump accounts. So I imagine that we might get a name change in the next administration. Because at this point, it's looking like it's going to be Democrat. That might change, but even if it's Republican, there's a decent chance that they rename it. But definitely the next Democrat administration, because this program is the kind of thing that's going to stick around for a long, long time. All right. So that's one of the pieces of news I wanted to bring with you. There were a bunch of tax court decisions that have come down over the last week or two, and it's getting kind of like which ones do I pick and choose? And um, there was one recently. Let's see. Let's go back here. That talked about a Treasury rule where it was thrown out in court. The Treasury rule was thrown out in court, and this was an explicit confirmation of the Raimondo doctrine. So, or you call it post Chevron deferral. So back in was it the 80s? I can't remember when the Chevron decision was, but in the Chevron decision, this went to the Supreme Court, and it said that the the executive agency, like the IRS or like the EPA or like all these other executive agencies, the alphabet soup, we're going to defer to their interpretation of the um, of the statutes, of the relevant pieces of legislation, and we're going to take their word as far as how this law is supposed to be applied. Then a couple of years ago, we had the Raimondo decision, also with the Supreme Court, reversed all that, and it said that without direct legislation covering an issue, then executive agencies are not to be deferred to, and that this is the job of Congress, which I think is the correct decision legally. Um, and so we had a court decision this past week where the Treasury uh, rule was thrown out because there was no legislation. So it was following the Raimondo doctrine, and I think the court decided correctly that the there was no backing statute for this particular action, and the particular topic is irrelevant. The point is that there was no legislation, therefore IRS cannot make uh, cannot create law effectively because it's an executive agency. It's not a legislative agency. So they can only take what is on the books and then apply that. So there are a lot of places where there is no law, but there is, IRS guidance and council memos and all kinds of things. So the biggest one that's relevant today, I think, is crypto. So back in 2013, the IRS put out a publication or a notice saying that cryptocurrency or virtual currency, as they called it, is to be treated as property. And there have been a couple refinements over the years since then, but that was kind of the analysis. I'm not even sure that that's wrong, but there are weird things that happen because cryptocurrency is not like other property. But there is no legislation regarding the taxation of virtual currencies. So how can the IRS say anything in a post-Raimondo world? So, and my opinion is that they can't. So it's although there was another court decision recently that struck down the exclusion of staking rewards because basically there wasn't material involvement in gaining them. So the court decided that in this particular tax filer's case that it should be included in income, which is depends on the staking mechanism. So in their case, they staked coins and they received other coins, even though they couldn't necessarily pull those coins off the exchange. They were able to trade those if they wanted to, then pull those funds off the exchange. So it was a complicated fact pattern. And so, if you are entrusting staking to third parties, I think that decision makes sense. If you are staking things yourselves through decentralized finance contract actions, I'm not convinced that ruling applies. So it gets complicated because cryptocurrency is very complicated. So you have to factor in whether you're retaining dominion and control, or if there are other types of assets in play. So everything is case by case when it comes to crypto, because the specific fact and circumstances can change so wildly. There was a chief counsel memo, it was last year, the year before, saying that NFTs, which are non-fungible tokens, so people using these for artwork and for fractionated ownership of things and all kinds of stuff. The chief counsel said that you have to use a look-through analysis to see what the underlying representation that you're buying and selling is, as to how it's treated. And that makes a certain amount of sense. But again, there's no legislation. This chief counsel memo is just like, it's like your opinion, man. It's like Big Lebowski there. So it's kind of a wild time in the tax law because of all these different kinds of things. However, the overall pattern that I described, I don't know, 2 months ago now with the AI powered auditing systems, that's continuing to be built. And my thesis, I think, is going to be proven correct, where in the next 5 years, we will see AI powered audits going, out and generating substantial tax income from American taxpayers who don't respond just through default judgment, effectively, because most IRS notices don't get responses. And I have sympathy for sure because I was one of those. So the way I got into taxes way back when was in 2007. I started getting letters saying that I owed $1.3 million, and I stuck my head in the sand for 2 years. And then I got letters, and then certified mail, and then phone calls, and then finally in 2009 they started garnishing my wages. And then I was like, okay, now I got to fix this issue because I knew there was no way it was right, but it took time, and it was a process, and that got me into the tax world. And so, there's a lot of people, uh, hundreds of thousands, that get letters every year, and there's just no response. And the IRS will say, well, we didn't hear back, so we're going to assume that our assumptions are right, and therefore this taxpayer owes, whatever the number is. Hopefully not 1.3 million, but it is it is an issue. And so the AI powered enforcement actions that are coming are going to be relying on that because, like I talked about previously, you still have the right to due process. So you have to be able to escalate to a human being if you are responsive. But if you're not responsive, then it's just default. So with that in mind, the way I'm developing everything now is uh, is that we have to build autonomous systems that automatically capture information and log it. And so what I am building right now is a uh, a receipt capturing mechanism. And so, everybody knows, you've heard, you're supposed to keep receipts. There's the Cohan rule, about $75, but still better to keep everything. And nobody does it, or not nobody, but people don't do it effectively, and especially if you have the paper receipts. After, because the thermal paper that they print stuff on, after a couple of years it fades. So if you get one of these audits 5 years from now, you go back into your shoebox of crap, then you open up the thing and they're all blank. It's like, well, how do you justify anything? It's like, yeah, I got my credit card statement, or I got my whatever statement that reflects the purchase, but how do I know that that purchase is what I'm claiming it is on the tax return? So I I turned this over to my developer, who I love, by the way. Uh, it's a guy named Rodrigo, and he implemented this system that's going live next week. And so the first version that we're doing for this is for realtors specifically. And it's just because I have some other things going on with realtors. So it's like that's an easy first uh, market to target. And what we're doing is you take a picture of a receipt with your phone. You text that picture. So my new operating paradigm is no logins, no nothing. Text and email is kind of my operating assumption. Like if you can't do text, you can't do emails, like, well, then you're on paper and good luck to you. Because our systems are not going to work for that. So you take a picture of the receipt, you text it, we receive it, and then it gets automatically processed. The image itself gets captured and saved permanently. A ledger is created that identifies date, the vendor, the amount, the categorization, and then how confident, because this is AI powered, how confident is the AI in that assessment and why? And on a line by line basis, each transaction is tied to an actual image that is archived of that receipt. So you never have to lose a receipt ever again, because every transaction that you put through the system is tied to an actual image of a receipt, and then that propagates through to a profit and loss summary. So if you are a realtor, for example, and you're out and you're taking a client to lunch or dinner after showing them a whole bunch of homes, then you snap a pic of the receipt. If you have to fill up your car with gas, snap a pic of the meter, on the gas pump. And whatever it is, just take a picture, send it, never have to think about it again. And so what I'm starting to do is take that methodology and apply that to all kinds of stuff. So right now we have the text working. Rodrigo told me today that the email version of that same process is working. Um, but there's some setup stuff we have to do. And then we're going to apply this technology stack to a lot of stuff, like accountable plans. So if you have an accountable plan, which everybody should, and you have an executive suite where you make management decisions, which everybody should, um, then, once we define a custom map for, these type of expenses for this client, have this allocation, then we can run that through the same kind of system and then auto populate an accountable plan. Um, and again, we never have to worry about the math again, right? As long as people just take the pictures. And so, and it works, with email, if you get a receipt in your email, just forward it to a pre-specified address, and then, we're good to go. So, this is the kind of system that we need to build, because it builds the documentary vault over time. And then if you get one of those AI powered letters in 2030, then you can turn your AI system on your vault and say, hey, answer this question. And it'll just do it because it has all the data. That's the whole thing. You have to have the data in the first place in order for your AI agents to be able to formulate these responses. So the first one, we're doing a test offer starting next week. where, it's advertising on Facebook saying, hey, 30 days free for this tool, no login or no credit card required. It's just free. This is a live beta that we're doing to iron out any kind of bugs. And at the end of that 30 days, if they want to continue it, then we'll figure out some number, whatever the number ends up being. And it should be fairly cheap because once the system is structured, then the AI cost of doing it is, it's not zero, but it's low. And I'm hoping that we build it in such a way that our administration support costs are low. So assuming that's all true, then the price of the product will be low. But we're using this month to kind of figure those things out. But then we can apply the same methodology to accountable plans. We can apply the same methodology to bookkeeping buddy. So if you want to do your own books and you don't feel like paying for QuickBooks because it's not very non-accountant friendly, like all bookkeeping software. So Bookkeeping Buddy is a system where you're just processing bank statements and credit card statements. So you just drag and drop, it auto analyzes and creates a profit and loss statement for you. And that's really what most people under 250K a year need. And there's a break at 250 because at 250, then you need to tie in balance sheets for the books and the tax return, and then you need real bookkeeping. But below that, you just need the information, and the information is to let you know what decisions you should be making, which you should be doing in your executive suite. So this is how it all ties together, different strategies. So we'll ideally evolve Bookkeeping Buddy into the into an email-based application where you can just, instead of dragging and dropping, because still people need to log in, and it's just doing that one step is the hardest part for most people. And so if they want, they can do it through email, and then the response gets sent to them through email, and we can do reminders and all that kind of stuff, which is pretty good. So we'll do it there. We'll do the accountable plans. Once we have the accountable plan and we have the books, then we can do summit strategy sessions. So summit strategy sessions is my version of what you might hear as the master's strategy or the Augusta plan. The way I do it is you actually have a management meeting. And what do you do at your management meeting? You review your books. And I have a particular framework for how to actually do that so that you can actually make actionable decisions and then do your reimbursements that your company owes you for your accountables and all that kind of stuff. But you have to have the data in order to do it right. And so that's the sticking point. And so if we can make the data compilation as easy as possible, where it's literally either sending a text or sending an email, and then as far as I'm concerned, you don't have any excuses anymore. So it takes 10 seconds to actually send the stuff off, and then we have AI process it on the background, and then we push it back to you, and then you have the data, and we have the data, and we can actually help you with the summit strategy session review. So and we can build that again into a text process where it's like, let's work through this and think about all these different things. Did my marketing efforts work out? So like I ran 3 marketing tests over the last few weeks, and results were not great, but they were encouraging in that I was having a conversation in my AI system today. I was saying, okay, let's look at these results. Let's look at how much we spent. Let's look at the different, advertising angles that we tried out, and look at the actual results that we got. And, is this worth pursuing? And I was able to establish that, yes, even though the numbers don't work currently, there is enough indication that there's sufficient product market fit that we should pursue this and continue to tweak and continue to get things working, because they should pencil out in the end. Because all of the free tools that I give out and all the free checklists and in the paid services like Bookkeeping Buddy, all of that is to help people, primarily small business owners of various stripes, to come into the tax sherpa ecosystem and start saving money with proper tax planning. Right? And obviously we charge for that. Clients make multiples on what we charge, so it's win-win for everybody, financed by the U.S. government, because you the way the US government is financing this is by you not owing them as much throughout the year. And so, depending on how much you make, that could be, a small change, like $8,000, or it could be a big change. It might be $300,000. It just kind of depends on the situation. So, there are different strategies that apply at different levels for different facts and circumstances for different people, because the complex thing about the tax code is that everything is individual. So, um, so we have to build systems that are context aware for the individual. I had somebody comment on the school platform that it's like, oh, we're still issuing, uh, non-individualized stuff, and I was like, yeah, because it's one by one that we're getting through everybody. so, we're getting to. There's a big long list, and we have to build custom tooling for every client. And the great thing about where we are today in technology is that can be done. It does take work. It takes work on our part to kind of establish the rule set for a particular client, but then we can actually do that. Um, you know, and the operational principle is that everything is done right for that person, but we have to build it one at a time. So it does unfortunately take time for that. So um, that is kind of the story for this week. So all of this stuff is in development. The courts are interpreting the Romano decision correctly, in my opinion. State Street is going to make millions and millions of dollars from the Trump accounts, which I find aggravating. And actually, in the last, I guess, minute that we have, um, there was an important announcement. I think it was yesterday or the day before. The IRS is winding down the first time abate program and replacing it with an automatic exemption from penalty program. So if you have been filing, properly for the last 3 years and you get a penalty, then you can write a letter or you can call. Letters work better because calling is a nightmare. And you can say, hey, requesting first time abate. And so that's the magic words. There's IRM 20.1.1 point something. There's a section in the Internal Revenue Manual that you can cite. Any penalties would be waived, which is great. However, now they're saying starting in 2027, they're going to automatically apply those penalty waivers or abatements for taxpayers who qualify. And so you just won't get the letter in the first place. And, I agree that should be what happens, but we don't actually know. Because, IRS systems are not great. So, we'll keep an eye on that. And, if you do get penalty letters, definitely bring it to your tax pro. If you're a tax sharp client, obviously let us know, and we will figure out the best way to address it. Because sometimes we could do first time abatement, sometimes we can do reasonable cause abatement. Sometimes it's just the IRS process things incorrectly, which happens all the time. And we say, hey, we sent you this on this date. Here's proof, because we do everything certified. And then other times, there really is a penalty for whatever reason. So yeah, that's kind of the news for the week. My tea is still not very cold. Still pretty warm. But it is time for me to call it for this week. And then, so I'm thinking 3 o'clock Fridays will kind of be my weekly wrap up going forward. And then see you next week.